We'll wait and see if this is FIS selling for a second day in a row in the afternoon session. We saw that yesterday as well, if you recall. Let's pull up the heat map and see what's working. I mean, the morning was at least dominated by tech stocks, but that doesn't seem to have worked. More red than green, definitely on the charts there. Bajaj Twins are doing okay. Bajaj Finserv and Bajaj Finance, 2.5-2% up. RL, of course, with that 1:1 bonus share announcement up in the green. But even then, has given up its gains. The stock was nearly 2.5-3% up at one point, but has given up its gains even as the AGM is underway. Britannia, Apollo Hospital, some of the winners. Apollo Hospital has consistently been clawing back some space after being beaten down for most of last week. So that's one to watch. ITC. So, you're seeing a bit of the FMCG kind of play there. HCL Tech, after its investor day, and positive brokerage reports following investor day, has had a decent kind of a trade today. But on the losing side, you're seeing Grasim down 2.5%. Some of the autos are also not doing too well. iSure and M&M in this bottom list. Metals hurting a bit. Hindalco nearly 2% down, even JSW Steel in that lot having a bit of a tough day. So I would say overall, not a very great trend for the market. And, I will just quickly look at broader markets before I come to Hersh for stock-specific stories. And broader markets also actually deeper in the red, almost 1% down on the Nifty Midcap 100. Small cap index also 1% down. So the bears are taking over this afternoon, Hersh.
Absolutely. Let's pull up the Nifty Midcap in terms of top stocks which are gainers as well as losers. I'll talk about the losers first. Tata Elixir down 3.5+%. Now, after that very strong rally that we saw in the stock, almost 17% higher in that single day that we saw on Tata Elixir, we've seen 2 consecutive days where we've seen a bit of a cool off. So keep your eye out on that one. Nykaa also lower, 3.5%. So those are a couple of stocks which are definitely losing in trade. But the gainers, Paytm, Ajanta Pharma holding up fairly well. Prestige Estates in a market which is otherwise looking increasingly difficult, especially where the breadth of the market is concerned. So that's what's really impressive about some of these stocks doing well in trade. Some newsmakers as well, if I can pull those up. Sonata Software, Genus Power, KEC International. New orders pouring in for KEC International, 1,100 crore order coming in yesterday as well. And the stock is up and away, of course, off the day's highs, surely off the day's highs, very close to the day's lows, but doing very well in trade nonetheless. Let's pull up a Paytm, see the intraday chart for that one, because plenty of news and action happening around this one all through the week, in fact, not just today. And let's also pull up some on the back of brokerage notes. PNB Housing 5% higher in a market like this on a positive, very constructive brokerage note coming in from Axis Capital. I mean, very, very strong move. HCL Tech holding up fairly well today after yesterday's move. Today's 1% move in a market like this seems quite impressive, at least to me. So some of those buzzers, you also have a Lemon Tree, a Shally Engineering, some of those buzzing on the back of block deals. On the losing side as well, Wealthspun, Living, Interglobe, again on the back of block deals. Interglobe, again, promoter selling, part of that reason where you've seen a 2% shave off on the stock. Now, promoters have consistently sold since September of 2021 when promoter ownership was close to 74%, currently stands at just 55%. Just the extent of promoter selling, very, very evident in something like an Interglobe stock, obviously lower by 2% in trade today.
I just want to add on Interglobe though, Hersh, the promoter selling is something which is well known in the public domain and fairly planned. So maybe that's why, I mean, today, just because of the sheer size and the fact that Rakesh Gangwal has increased his stake sale to 11,000 crores from about 6,500 crores is definitely seeing a pressure on the stock. But it's, I mean, I don't know if you can look at it as a fundamental, movement on the stock because everyone knew that he's getting out.
So that's one, but even fundamentally, they're doing different things. They're getting into business class with regard to domestic, their domestic flights. That's something which is new, something a bit of a niche. Also, their market share just keeps creeping up. So fundamentally, of course, all positives coming through, but just from a promoter selling perspective, they've consistently been trimming their stake.
But that's the point I'm making. Gangwal selling is because the promoters, the co-founders have had a fight and they have decided to part ways several years ago. So this is part of something that they had planned.
Sure.
And just on the market share point, I mean, we have a story we'll take a little further in the show on SpiceJet. And that's just astonishing. I want to see what the stock is doing. So sources have told us that passengers at Dubai airport who had SpiceJet tickets were not allowed to board the flight because of payments that the airline has not made. It's not impacted the stock yet. Maybe there's a hope that there's some kind of a bailout coming. But, you know, the fact that when these things start happening, a market share of an Indigo goes up even further. So yeah, those are some of the big players today that are on radar. Let's go across to Rajesh Palvia now. He's SVP Technical and Derivatives Research at Axis Securities. Kush Bora of kushbora.com also joins us, of course. Rajesh, let's start with your take on the indices, because I mean, the selling pressure is actually getting deeper as we go along in the afternoon. We're still about staying over the 25,000 mark, but just about.
Good afternoon, Tamanna. Good afternoon, everyone. So today's the pressure is just because of expiry, as most of the call writers are still there at 25,100, 25,200 strikes. So that may act as a supply pressure, and that's why we are seeing some pressure in the indices from the higher level. Though still put writers are still intact at 25,000, even 24,900. So these levels are likely to act as a good support area, and even in this dip, again, Nifty is trying to get some support buying action from 25,000 level. So I think for expiry point of view, 25,000 may act as a support, and possibly again in the later part, we may see some pullback towards 25,100, and possibly expiry may be around 25,100 plus minus 20 point would be the likely to be the expiry for the month of August series. For Bank Nifty, the major challenge is at 51,300 to 51,400 range. That range is very important to take out on the high side. Until the Bank Nifty not crosses those level, we may see some supply pressure to remain around those level, and possibly we may see some consolidation in range of 50,900 to 51,300 for some time. And either side, the breakout or breakdown will decide the major direction for Bank Nifty. So Nifty is looking one notch better compared to the Bank Nifty at this juncture, and possibly post expiry again we may see a resumption of uptrend, and Nifty may head further higher to 25,200 to 300 kind of zone also.
Kush, what about you? Would you say that the Nifty looking relatively better? Would you go long on the Nifty right now, or sort of be very, very careful?
Hi, morning, Tamanna. How can I go against whatever Rajesh has?
It's afternoon, 2:40.
I think I'm still in that zone.
In Kush land, it's a different time zone.
They used to so used to bring the morning show. I'm used to that.
Or maybe sitting out of Europe. Maybe that's. Kush, are you?
That explains my absence from the studios.
Absolutely. Go ahead, Kush.
Sure. No, I was saying, how can I go against whatever Rajesh has said? So I will do a +1 on that. I completely agree with the fact that what we are seeing today is perhaps just an expiry move. And if I may say so, at the risk of repeating myself, perhaps I told you so, in the sense we did discuss at the beginning of the week that 25,000 will perhaps be achieved, but we might consolidate given the monthly expiry pressure. Now there's a concept of max pain in options, but I'm going to use it a little differently, which is throughout the day, we saw around 100, it perhaps indicated that, we might expire there. We've given way. So whoever's written those puts will perhaps actually be, feeling some pain. And to take it a step forward, I won't be surprised if we expire close to 25,000 or maybe just under that. It's not a big deal, right? 25 points from here. But that strike anyway had the highest put base going into the expiry this morning, right? And this market has a tendency of testing the highest call or the put base, depending on the direction of the day, and perhaps even breaching it for a while. So while I won't be surprised to see Nifty head closer to 25,000, but this doesn't take away from the fact that, we do look at Nifty heading to, 25,800, 26,000 levels also in the coming weeks, if not sooner. So on the whole, the trajectory is up. Bank Nifty, what I would add is that we've been bullish on this for some time. While there is consolidation, the base has shifted higher. So from 49,800, 50,800, we're now looking at a 50,800 to a 51,400 kind of a range, which also is a healthy sign. So perhaps tomorrow the Friday effect might play out. Who knows? But I think from the next week onwards, the indices might resume their uptrend.
Right. Expecting an uptrend, Kush. Exactly last week I had asked you whether Nifty will hit 25k. We've hit that. Hopefully this one plays out as well. Rajesh, let me come to you. Nifty IT, it's been surprisingly resilient today, despite an otherwise slightly weaker market. It's holding up fairly well after yesterday's and despite yesterday's moves, if I can put it. Where to from here?
So Harsh, definitely Nifty IT is almost now trading near to its all-time high trajectory, and the way most of the large cap IT as well as the mid cap IT stocks have shown buying interest in last couple of weeks, that clearly giving us confidence that we may see furthermore upward momentum in most of the IT stocks, be it TCS, Infosys, L&T Technology Services, Birlasoft, or other stocks, HCL Tech. So all these stocks are almost, trading above to their near-term, short-term breakout levels, and some of the stocks are almost trading near to their all-time high trajectory also. So we believe that here we can see a good traction on the high side, and the IT index may continue furthermore upside. Possibly we may see IT index to scale up to the level of 42,700 to 42,800 also in the continuation of this up move. So I think till IT index is holding above 42,000 level, I think trend may likely to behave on the bullish side, and one should try to find out the opportunity in IT stocks as the whole sector is looking bullish at this juncture.
Rajesh, your picks for this afternoon?
So our first stock is IEX. The fresh breakout on expiry day for IEX. Now stock is comfortably holding about 200 level. The way stock has moved up in last couple of weeks, stock is moving in upsloping channel on a weekly chart, and series on series, the very strong performance on the stock. So we believe that here also we can see a good traction on the higher side. Possible target towards 215 we can see in IEX, and one can keep a stop loss of 198. The second stock is from the Bajaj Group, that is Bajaj Finserv. Both Bajaj Finance, Bajaj Finserv have shown good buying interest in today's session. The way Bajaj Finserv managed to view breakout of consolidation range, we believe that here we could see further rally to extend, and we may see a target towards 1800 for Bajaj Finserv. Keep your stop loss at around 1722. And the third stock is from the mid-cap IT space, that is L&T Technology Services, LTTS. Very strong breakout in LTTS, and the way stock has managed to give breakout on the weekly as well as on the monthly chart, we expect this rally can extend further, and possibly LTTS may, on a positional perspective, we can see again, stock may move back to the all-time high trajectory also. But for trading point of view, we are projecting target towards 5850 with stop loss of 5540 kind of stop loss one can keep.
All right. So those are Rajesh's picks. Kush, yours?
Sure, Harsh. And before we get to that, thank you for highlighting, the 25,000 conversation that we had in terms of the target and the timing. And on a lighter note, I'm glad it's you doing it and not me. Otherwise, Tamanna would have perhaps pulled me up once again for blowing my own trumpet. Yeah, but that's on a lighter note. My picks incidentally happen to be from the cash segment, both of them. No futures call today at least. Vedant Fashion. This stock has been doing very well in terms of the up move. But today, if you see, the breakout has come on the back of a very good volume as well. And maybe we might do a piece on this going forward, or I might highlight a few more calls from this space. But the textile space has actually been doing quite well, and there have been a lot of other names also doing well. So that's one sector that's sort of flying under the radar, but some of the stocks in this space have been doing well. So as far as Vedant Fashion goes, the target for this one, 1255 was the first target. It's trading fairly close to that. So 1275, the second target. Traders, viewers can play for this one. 1200 is where you place your stop loss. The second stock is Venus Pipe. This stock too has had a brief period of consolidation. And now, it's given a breakout. The volumes have also seen, a fairly decent uptick. From a near-term perspective, you're looking at 24.60 and 25.25 as the targets. 23.40 is where you place your stop loss.
Okay. All right, we've been talking about aviation, and we had a little chat about Indigo as well as SpiceJet. So two stories and two stocks in focus. One is Interglobe, where the stock is under pressure as Rakesh Gangwal is offloading more stake than was previously expected. Mahima is going to talk to us about that. And then there's SpiceJet that despite passengers being stuck with their tickets, stock is up 4%. So we'll come to it one by one. Let me start with you, Mahima. So we knew Rakesh Gangwal was selling stake. He upped the size of that stake sale before markets opened this morning. But is it really being seen as a negative for the stock?
Well, yes, the stock is a tad bit under pressure, and in terms of the details as to how the block trade has taken place, around 5.8% equity exchange hands, roughly 22.5 million shares were exchanged, and this was at 4714.9 per piece. Now, in terms of this block deal, now overall the Gangwal family shares will come down from 19.4% to 13.6%. In terms of the current holding, Rakesh Gangwal held roughly 5.9% as of June 24, and Chinkarpur Family Trust held around 13.5% stake. So overall, the 5.8% stake, as I said, will bring down the stake to 13.5%. Now, in terms of just the timeline as to how Rakesh Gangwal has been offloading his stake, Feb 2022, he stepped down from the board, and since then he has been offloading his stake. As of December 22, Gangwal family as a whole held 34% stake. Rakesh Gangwal had around 13.2% stake, and Sobha Gangwal, his wife, had around 7% stake. And by September 23, Sobha Gangwal completely exited the stake. Now, in terms of the overall trajectory, also in terms of promoters offloading their stake in Interglobe Aviation, promoters as of September 21 held 75% stake, which as of June 24 was 55%. FIs have been increasing, of course, buying those stake from the promoters, where in September 21 it was around 18%, which has gone up to 24%. For DIs, it has gone from 4% to 15%, and overall public shareholding is also more than double from the 2% mark to 5% mark in Interglobe Aviation. So the question really here is that, now that the brokerages are actually positive, and the stock is also fairly done well, and they've introduced new airlines in terms of international fleet, as well as the new business class introduction, why are promoters actually exiting the stock?
Okay. On the other hand, SpiceJet facing a spot of bother. Stock not really reacting yet, but very big story coming in from Aditya. Yes, Aditya?
Yes, so basically financial troubles are deepening for SpiceJet here, and what happened at Dubai airport today is a sign of it. At Dubai airport, the passengers were denied boarding from their flight because of the non-payment of dues by SpiceJet to the airport. Now, this is not the first time that it has happened. In last 1 month, this has happened for the second time. Earlier this month, Mumbai airport had also issued an advisory for the SpiceJet passengers, which it later withdrew, but the advisory said that there might be a disruption in the flights for the SpiceJet, and passengers should plan accordingly. Now, this has become a recurring issue, and also my sources are telling me that financial troubles are quite serious at SpiceJet because the salaries have been delayed. The employees were paid their July salaries in the month of August. So clearly SpiceJet is dealing with a lot of financial troubles, and also in the recent times we have seen that many of the SpiceJet lessors have been filing cases against the company, which has already added to a lot of pressure for the airlines.
Right, pressure on the airlines, clearly not reflecting on the stock price there. Thanks so much for that, both Aditya as well as Mahima. But let me take it to Rajesh. Rajesh, SpiceJet has been a doubler over 12 months. Again, very, very strong returns even on an Interglobe. Your views on some of these airline counters?
So definitely in airlines, Indigo would be our preferred choice at this level also, though stock has corrected from higher level, but still the way stock has moved up in last couple of months, and stock is almost now trading almost close to its all-time high trajectory only. We believe that, here again, there is a possibility that in decline one can buy and accumulate this stock till stock is holding above 4450, 4500 kind of zone. Trend is likely to remain on the bullish side for near term to short term structure. And on the higher side, once stock again manages to cross above 50 or 48.50, I think this stock can again scale up to the next target of 5000 to 5200 also. So I think Indigo can be in this decline. One can use this decline as a buying opportunity. If another 1 to 2% kind of correction comes in this stock, one should try to buy and accumulate with stop loss of 4500.
Okay. Let's look at some of the other buzzers today, and just a call on Paytm, if any. Kush, the stock has seen its own set of ups and downs, but has had some good news today. A very, very bullish report out from Ventura. We spoke to Vineet Bulinshkar on it as well, but I'm wondering if you're seeing any kind of excitement on the charts for Paytm.
We are, in fact, and I think it was perhaps last week or a little before that. We said that this is not for the faint-hearted, but the risk-reward ratio on this one is extremely, extremely high, very well placed. So if someone does want to, venture, a trade, you can consider. It's crossed some of the key averages. So you could very well say that the recovery is firmly underway. Volatility will perhaps be par for course, but as I said, you'll have to sort of live with that. This is not something that's for the faint-hearted. Now, the stop loss level that you're looking at is 525. Keep a strict stop losses at that. You've got a support zone at that point. A couple of averages also converging thereabouts. So that should act as your stop loss. On the upside, I won't be surprised if the stock moves to 600, which was a recent swing high, and perhaps even past that as well to 640 kind of levels. So the risk reward ratio is extremely favorable. Recovery underway and comfortably crossed all the near term averages that we are tracking. So with a stop loss of 525, you could venture a trade in Paytm.
Okay, so that's really the take on Paytm. Just some of the winners over there as well. We were talking a few minutes ago about Sonata Soft. I want to talk about HCL Tech as well. Rajesh, anything from the IT pack that stands out? And let's talk about these two counters specifically on the charts.
So I think from IT pack, TCS from the large cap space is our preferred choice at this sector, and from mid cap, though I have already mentioned about LTTS. If I analyze on the HCL Tech, this stock has also done well in last couple of weeks, and the way stock now managed to give breakout of its previous swing high of Feb 2024. I think here is again potential to continue furthermore upside. Possible target for HCL Tech we could see towards 1830 to 1850 kind of zone. So I think HCL Tech one can hold on, and the trailing stop loss I would advise around 1700 should be a trailing stop loss to hold on HCL Tech.
All right, so HCL Tech, let's pull up some Tata Group names because there were some big movers midway through the week. If I recall on Tuesday, some good moves. Tata Investments, well, slightly lower. Tata Consumer, if we can. Tata Tech has been a big mover as well. Kosh, while we are at it, any views on some of these Tata Group companies?
Went up very sharply, and now they are seeing a very sharp fall. Tata Technologies, Tata Elxsi, a couple of these names had run up quite sharply, and we've seen very sharp sell-off yesterday and a continuation of that today. So no fresh entries recommended because the kind of fall that we are seeing doesn't seem to have halt or even slowed down. But yes, even if you've got them at fairly lower levels because the move started from fairly lower levels, then you should continue to hold. Now, for example, at Tata Technologies, your stop loss for this one would come in close to 1035. As far as Tata Elxsi goes, the 200-day moving average support of 7625. That's the one that you're looking at as a near-term stop loss. So continue to hold. I wouldn't recommend a fresh entry, at least till this fall stems and there is some stability that comes into some of these names.
Right. Circling back to tech, HCL Tech, CLSA has come out with its note along with a slew of other notes that have come out. But very strong move yesterday, backed up by a 1.7% move today. And of course, it's a day after their investor meet. Rucha joins us to give us the highlights of the meet and some house views. Rucha.
Thanks, Hersh. So I'll start with the investor day takeaways. Now, the management has laid down next 5-year plan for high growth. Now, it also claims for a strong breadth of services, which would be better than the peers. And many of the brokerage houses also believe that HCL is one of the fastest growing IT companies amongst its peers. Now, it also has plans to increase quarterly net new deal win run rate to around $2.3 to $2.5 billion, which currently is at around $2 billion. Now, the top opportunity which the management mentioned in the analyst day yesterday is that it expects the total addressable market for IT services to be around $2 trillion by 2030. So this could possess as a big opportunity for HCL Technologies. Now, it also aims to improve the operating margin. Now, HCL Tech has talked about improving its operating margin since the last couple of quarters, but because of high employee costs, it was not able to do that, and it also therefore reiterated that it would like to improve the operating margins going ahead. Talking about HCL software business, now this is a high margin business with around 25% EBIT margin which came in for FY24. Now, coming to the brokerage house calls, we have CLSA on HCL Technologies, which has maintained a hold rating on the stock. So despite HCL Technologies being a high growth rate company, the brokerage house believes that the valuations over here are very stretched, and the growth which will come in the near term is already priced in. Hence, most of the brokerages are having a neutral or a hold call on the company because of stretched valuations, even though there are green shoots in demand according to the brokerage house, and also a revival in discretionary spends in the BFSI space which will prove good not only for HCL Technologies but for the entire IT space as a whole.
Okay. HCL Tech in focus, stock still about 1.5% up, and it's, I think, positive on the charts as well, as we've spoken to our guests. We'll take a very short break, but on the other side, we get you the top BTST ideas and the F&O check as well. Stay tuned. Welcome back. All right, it's been an astonishing recovery in the markets. When we started the show, and as Hersh was pointing out, we started the show saying that the markets have given up most of its gains. And now you have seen this big swing up spike of about 0.5%. Let's pull up the Nifty contributors, and obviously a whole host of reasons over there. RIL up sharply, also adding to it, ITC, Bajaj Finance, Tata Motors. Let's pull up the heat map just for a second and see what's buzzing over there, because you had the Bajaj twins doing fairly well. Yeah. And actually, RIL is not in the top 5 even. It's Bajaj Finserv, of course, with weightage they are. But Bajaj Finserv, Bajaj Finance, BPCL has swung up. Can I just pull up the intraday of BPCL and see what's happening there? Tata Motors also new entrant to the top sort of a list. Yeah, sharp up move in BPCL. Wonder what's happening there. Can we pull up Tata Motors intraday as well and see if we have buying coming in? Yeah, there you go. Tata Motors seen a sharp up move. Would be interesting to see what happened in Tata Motors, and is there some big buys coming in some of these counters. Britannia ITC were anyway on top of that list. But you have some sharp moves and some good gainers in the last few minutes as well. The Bank Nifty, let me just pull up the Bank Nifty as well intraday and see what's happening there and whether the Bank Nifty also has been contributing. Not that much, frankly. It's not a Bank Nifty story. Sectoral indices will give us a clearer picture. IT, yes. Maybe autos coming back because of the kind of moves we've seen. Nifty oil and gas is the story here. Is HPCL, ONGC, IOC moving as well? Let's take a look at that. Well, because the whole energy pack seems to be a buzz, and that's where these moves are coming from. Yeah, HPCL has moved up close to its day's highs as well. BPCL we already talked about. Let's look at Oil India, IOC. IOC is also seeing a bit of a peak there and really very close to its day's highs. Oil India and ONGC also doing well. But yeah, that's the big takeaway. Mahantesh Sabarat joining us now on all things markets. Mahantesh, very good afternoon and great to have you on the show. Let's just talk about the kind of up move we've seen in the last few minutes and where that excitement is coming from, because it was looking quite dismal at about 2:30.
I really don't know what's happening for the day as per se and this up move that we are seeing. But generally speaking, what we have been seeing is that the FPI investments are becoming more steadier and moving up. Mind you, in this latest MSCI corrections that we saw, we had large number of India stocks getting added to the MSCI index, and therefore the weight for India has moved up to 20% within the emerging markets index. That tells you the story which says that India is slowly becoming a destination for investments, global investments, gradually. And with valuations not too, I would say, not too challenging when we compare it with the US kind of valuations, we are actually cheaper. India is cheaper relative to the US market right now. Therefore, all this buzz that we are seeing is probably in preparation for some kind of FII move, which is also getting timed with the US Fed's rate correction move.
That probably makes sense. Kush has a take on this. Kush, maybe expiry play you're saying, but then what explains what's happening in Tata Motors? Look at the Tata Motors chart. It's suddenly on a rocket.
What explains the change from 2:55 to 3:05 a.m., 3 p.m. rather, correct? That's the kind of moves that we've seen. And I was just reminiscing that, this is the kind of moves that we used to see in earlier days. I wouldn't want to call them olden days, but, earlier days when, the F&O was relatively a new, space in the markets. And we used to call this a 3 p.m. move. The markets would be doing whatever they were up until, 2:55, 2:59. And suddenly at 3 p.m., you'd see a spike, either way. That's exactly what we are seeing today, to everyone's surprise. So I don't think anything has changed. I think, what Rajesh and I were talking about is just that it's the expiry play. If I were to put it on an even lighter note, markets have heard us at the start of the show saying that we are bullish on the Nifty, going forward. and hence perhaps preempted that. But this is more of an expiry play than anything else.
Kush, I don't know if that's a lighter note, but that's really overly optimistic that markets have heard you. But okay, just what's flashing at the bottom of your screen might be explaining some of the exuberance. Look at the Moody's upgrade on the India GDP target. It's gone from 6.8% to 7.2% for the fisc. And that's for 2024. Real GDP growth view has gone from 6.8 to 7.2. That's quite a jump up. Could be one of the reasons we're seeing what we're seeing. Agam is joining us now for the F&O picture. And Agam, are you seeing a reflection of what we're seeing in the cash market with enthusiasm coming in perhaps in the last 10 minutes or so?
So firstly, Tamanna, this is not a good market for anyone who has gone short in options, because this is the kind of market where within a span of 5 minutes, you actually see the premium of 5 go all the way to 25, 30, and sometimes even 40 and 50. That's exactly what's happened. And you know what the funny thing is? That the Nifty still continues to trade within that range of 25,000 and 25,200. So what's really happened is that if you zoom out, the Nifty has stayed within a narrow 200-point range, and yet option premiums have gone berserk over the last, well, I would say 1 hour or so. And of course, while news flow to a certain has a hand in play, but also the fact that a lot of these option sellers have sold very, very cheap premiums and sold into very cheap premiums, and they are now paying the price, and a lot of them have been forced to move out of their own positions at very, very expensive price points. And that's exactly what's playing out. And on the, in fact, we've seen this kind of an expiry after a really long time. This is something which is typical of what happens in the last hour of trade on expiry day. And that's exactly how things perhaps are turning out when it comes to volatility, notwithstanding the fundamental pros and cons that have come through over the last 2 hours or so. Now, rollovers have picked up at around 62%, but I reckon that the last half an hour would perhaps change this picture, and this number will be a lot higher as we get into the Bow copy a little later on in the session. And the Nifty Bank, of course, again looking at an increase in the September futures should be August. Yes, September futures, correct. So we've seen a 10% increase there as well. Moving on, so as far as the option market is concerned, as I was mentioning, while we've seen the Nifty trade largely within a 200-point range, but there's been a huge volatility when it comes to option premiums, considering a lot of penny options have been sold out, and well, the traction continues to stay in that 200-point range as far as today's expiration is concerned. Moving on to stocks, let's pull that list out as well. So we have longs in Britannia, NTPC, and TCS as well. And among stocks, of course, these are the August futures, so it may perhaps not be as relevant, but naturally we will see considerable unwinding coming through as well. But all in all, perhaps today was a day where firstly the Adani Group companies will move the markets to a certain extent, and then of course there was the Reliance bonus issue, which actually got sold into surprisingly, and of course finally you have that Moody's update. So these are the handful of factors that have actually led to a significant amount of volatility, of course notwithstanding the kind of traction that we've seen in the option market too.
All right. Thank you, Agam, for breaking that down. Of course, things coming real time at us, and the inflation expectations, come out in terms of what Moody's expects for FY25, reduced from 5.2% to 5%, gives way to rate cuts as well. Mahantesh, I want to quickly try and get your view. In case of rate cuts, what would be the 2-3 go-to sectors that you would want to bet on? Because seems sooner or later.
So let's look at it this way. There are 2-3 sectors that you can clearly look at. One, from a rate-sensitive point of view, consumer discretionary is the space to be in, because a lot of consumer discretionary spendings are driven by enablers linked to interest rates. Lower the interest rates, the enablers become enhanced, and therefore the consumer discretionary space starts looking better. The second is, from a neutral perspective, IT is immune or neutral to basically rate cuts per se. But what really happens is the clientele that's facing these or the buying these services of IT companies suddenly see a budget that has become a little bit larger because there has been a rate cut for them. So IT companies can expect better business growth ahead. If not better business growth, at least what we have seen in the recent past, IT companies have not been able to deliver on their deal wins that they have won in the last few years. So that should be some traction there. And the third is really what happens when rate cuts is some of the financial companies see a trade-off. That essentially banks will see a trade-off. You will have NIMs actually squeezing, but there could be credit growth coming in, a larger credit growth that could potentially come in. And that could mean, depending on how the balance sheet is structured, what's the ALM mismatch, you can see some of the financials doing better going forward. So
what about the Bajaj Finance twins, Bajaj Fin and Bajaj Finserv, Mahantesh, one of the top movers today?
I don't know. This seems to be a little newsmacked. What I was able to understand is this housing story is coming up for Bajaj group as a whole, with newer stock coming into the market that could mean better investment opportunities for existing investors within the Bajaj family. So that enhances value for most of the investors. That could be one reason. But thankfully, both the twins are now exposed to what I was just enumerating about. One is they're exposed to the consumer discretionary sector, could potentially witness a large credit boom as we go forward when interest rates do fall. And from a balance sheet perspective, they seem to have among the lowest ALM mismatches within the financial sector. So that could mean that potentially they will not face the NIM compression effect that others would potentially see.
Got it. Mahantesh, do you find Bajaj Finance Finserv reasonable at these prices? Because the stock has had a pretty much flat run for a while.
You could have asked me this question 5 years ago. The stocks they have been in that overvaluation zone for many years. The reason why I talked about 5 years ago is that there is no valuation sense that you can really ascribe to the way these companies behave. But suffice to say, they're unique plays. One of the things that goes for the companies is that they are unique plays when it comes to the business model. I mean, there are others who are trying to emulate them, but Bajaj is simply too large to them. And I don't know how the regulatory setup or regulatory framework is now moving, which could potentially favor the twins. You have a lot of clamor that is talking about reduction of GST rates on insurance. You have, on the other hand, a uniform lending platform, P2P lending platform that is likely to come in. It's difficult to figure out what is going to happen, what move will be beneficial to the twins, but probably this regulatory framework setup will make the Bajaj twins at least more favorable relative to the competition.
Right. I want to quickly address what Mahantesh was referring to, where Bajaj Finance is concerned. Bajaj Housing Finance, the 100% subsidiary of Bajaj Finance, likely to get listed shortly. They filed for IPO, 7,000 crore fundraise, pretty much all of that money, or rather 7,000 crore worth of money going straight to Bajaj Finance, strengthening its balance sheet, capital adequacy. Growth has been strong for it. 26 to 28% is the guided band. Likely they will do that this year. So Bajaj Finance in focus due to that. But I'll again switch over. We have PNB Housing also in focus. A favorable note by Axis Capital. Now Axis Capital, mind you, initiated coverage on this stock on the 12th of August. Since then, the stock has run up 10%. Today, it's run up another nearly 5%. In fact, day's high was 5.5% odd. Now, what they've come out with a note, reiterated their buy stance. They've hiked their target price already in a matter of 2 weeks from 980 to 1070, 18% upside. They believe that there is a transitioning business model, clean balance sheet, and that reinstates their confidence. They believe that company has the ability to manage spreads in the event of a rate cut. Credit costs, they believe, will be in the guided range of 30 bips, and we spoke with the management earlier this month. They had reiterated that. And they expect share of affordable vertical to rise to 15%. This is going to hold the key in terms of growth. Whether they can continue to do that on the overall book, because they are running down their wholesale book. Mahantesh, any views with regard to PNB Housing?
Not really tracking this company.
Sure.
Per se, so wouldn't have an idea about the balance sheet structure right now. Although yes, when you look at the business model for a PNB Housing, like any other housing business model, these companies thrive on a substantial growth that keeps happening year after year in terms of housing loan dispersals. They thrive on a secure lending book, because housing finance is one of the most secured form of lending that we generally see. And third is, most of the housing finance have a recourse to financing ability, to their ability to raise funds is far more easier compared to any other, let's say, NBFC. So these three factors generally contribute to better growth for the housing finance companies. We have therefore seen within the core banking space itself, a lot of these top banks are moving very quickly into the housing finance space. The personal loan category per se is becoming a larger pie of banking books. So that's what is really happening.
Yeah, okay. Just want to focus on the mover and shaker this afternoon, which is Tata Motors. Let's pull up that stock once again. And I'm going to get a quick technical view first before I come to Mahantesh. Wow, quite a spike there, 1123. Rajesh, what are you seeing on the charts?
A very strong buying interest in this stock, and the way stock has now trading about 1100 mark, we believe that the target for Tata Motor on the high side towards 1250 to 1300 we can see in the continuation of this up move. So I think one can hold on the position with the stop loss of 1085.
Stop loss of 1085. Kush, do you have a target for Tamo?
Fairly similar. I'll actually go with the recent high, which is 1175, 1180 odd levels, and yes, the 1000 mark was proving to be a bit of a resistance, broken out on the back of good volumes. So I think this uptrend could continue. If you want to create a fresh position from a very near-term perspective, I think you should first look at 1150 rather, and then 1180 as your target, and then the stop loss would come in just under that 1100 level. So 1090 is perhaps where you place your stop loss. So that's for relatively shorter targets if someone wants to still do a momentum play on Tata Motors.
The momentum play is superbly sharp today, and no clear sort of fundamental reason right now. Maybe the DVR delisting could be one point, but we just want to play out this conversation we had with Shailesh Chandra of Tata Motors on navigating the SUV segment when they were launching the Tata Curve EV. Listen in.
First, let me talk about the Curve, because you mentioned about we entering a very congested segment. And actually, that exactly was the thought process when we were conceptualizing what kind of product we should launch in the mid-SUV segment if we have to really enter this. And rationale you have given that it is the fastest growing segment, so it made sense for us to launch a product. And that the reason was simple, that globally we were seeing that SUV coupe as a body style was growing in popularity, especially in the premium SUV segment, and typically you see that a premium SUV trend typically gets into the mainstream also. So we said that why don't we pick this body style and come with a clutter breaking concept in the market, and that is how the Curve got conceived.
Mahantesh, are you bullish on a Tata Motors, or are you seeing this as a momentum play?
I guess at this juncture it could be a momentum play. but there are a lot of good upcoming events as far as Tata Motors is concerned. The entire listing of its passenger vehicle, the demerger process that they are talking about, having separate businesses, the passenger vehicle business, commercial vehicle business. You also have new fuel policies now coming up. It's not just about EV. You also have the hydrogen mission being established at the center, talking about using hydrogen as a fuel going forward. And the other positive events for Tata Motor is upcoming new capex and new plant sites for them, which could drive confidence in terms of their business growth in India, per se. Globally, though, JLR presents a mixed picture. While JLR has seen an uptrend in volumes in recent times, they still carry a huge baggage when it comes to R&D spends and their entire product portfolio on the JLR side is not yet electrified to the extent that one would have expected them to be in terms of the offerings that they have, the EV offerings that they have currently. So all in all, it's the India business which is receiving far greater attention when it comes to the overall picture for Tata Motors is concerned. But let's see how these events that I talked about, the demerger, new plant sites, new fuel policies, etc., take shape for the company as they go ahead.
Okay. Now, just look at the wild gyrations in the Nifty in the last few minutes, and we'll pull up the Nifty intraday. Look at that. And then let's pull up the advanced decline, because what's going on here is very, very interesting. So call it expiry jitters or whatever you may, but you've seen the Nifty slump, recover sharply, and then see some profit booking once again. Rajesh, let me come to you on what would be your BTST call as, we wrap up this kind of a very choppy afternoon. Would you have a call on the Nifty for tomorrow or anything stock specific?
So definitely, Tamanna, as in my opening remark, I mentioned that, expiry is likely to around 25,100 plus minus 20 point, and we are almost around those level. And our target for this Nifty in the continuation of this upward towards 25,250 to 300. So I think one can carry the position as 25,000 put-based concentration and the support area, psychological support area is already taken by the market. And we believe that, till we are holding about 25,000, possible upward momentum towards 25,250 to 300 we can see in the next trading session. And even if we look at the global indices, most of the US futures have shown very good, rally in last half an hour of trade. So there is also, upward momentum from the global Qs is also likely to be there. Some of the stocks in the petro is looking bullish for BTST, and we are projecting target towards 430 and keep your stop loss around 408. Another stock that we like is, PFC, Power Finance Corporation. That stock is also looking promising. 565 to 570 is the target for the stock. Keep stop loss around 548. And the third stock is from the automobile space, that is Maruti, and we believe that Maruti can extend its gain towards 12,650 to 12,700. So here you can buy with stop loss of 12,320.
Okay, focus on RIL now. The AGM is on. Amrish Baliga, independent market analyst, joining us for a take on that, and especially the 1:1 bonus issue. Amrish, I would say lukewarm kind of response to the bonus issue bet. You had a sharp swing up, then some profit booking. It's been fairly choppy. How do you look at it?
No, see, typically bonus issues is sentimentally positive because otherwise it does not really change anything for the shareholder. But then we have seen that whenever bonus issues are announced, and especially by large conglomerates like Reliance, it does have a sentimentally positive effect, not just on the stock, on the market overall. So because of this announcement, we have seen that markets have recovered from those lower levels. But then the question is whether it will hold on or not.
What are the big sort of announcements that you are watching out for? If we don't have some clarity on listing of Jio or Reliance Retail, would that be seen as a negative?
I think the big expectations from this AGM is the IPOs of Reliance Retail and Jio. But then, in case there is no announcement on that front, yes, it can be a bit of a disappointment. But I think the way Mukesh Ambani has started off the AGM with the announcement of the bonus, it seems that there may not be other major big bang announcements. So as of now, I'm assuming that there'll be nothing much on the retail or the Jio IPOs.
That's one to watch out for, because that's something that the street was expecting. The 1:1 was not that expected, but this definitely is. So that's something that we need to look at. Amrish, thank you so much for joining us.
Thank you.
Thank you. Big news coming in on HUTCO as well. And let's pull up that stock. You saw that on your ticker just a second ago. So HUTCO also with a new order?
No, so they've got a license for infra financing, it seems. We'll try and pull up that line for you very, very shortly. But basically that infra financing, basically diversification from housing, outside of housing, will definitely give HUTCO a fillip, and that seems to be the reaction on the stock, at least as of now. Just going to quickly look at what's happening. They've been given NBFC Infra Finance Company certificate from the RBI. This will allow them for higher exposure limits in financing projects. Well, there's plenty happening in the markets today. Mantesh, any views with regard to HUTCO, if any?
Not really, but one can imagine where this infra financing theme is coming from. You have the railways essentially lining up huge amount of projects, not just in terms of augmenting capacities per se, but a lot to do with station redevelopment and so on and so forth. So potentially HUTCO could be eyeing that piece of infra financing. That means commercial real estate or housing real estate linked to railway premises or railway stations.
Okay, thank you so much, Kush, Rajesh, and of course Mantesh for joining us today as we wind down to what has been, if nothing else, a very volatile market close. I mean, dil tham ke baithe hai, something you should see for the Indian markets right now. The Nifty looking like we might close above the 25,100 mark distinctly, but really with what's been happening in the last half hour, can't promise anything. Looking strong so far. Let's pull up the heat map very quickly, just to give you a sense of what's been happening in the markets and what is contributing and what's not. I mean, Tata Motors is on a tear. This is like a rocket propulsion kind of movement in Tata Motors. At one point went about 6% up, is pairing off. The Bajaj Finance twins have been dominating FinServ and Finance. BPCL, all your OMCs have shown last minute sort of upswing. Britannia, of course, was doing well right from the start. Britannia, ITC, your sort of defensive FMCG plays were in play right from most of the afternoon. But look at how the entire auto pack has climbed up. Bajaj Auto, Hero Moto, all of them up there. RIL, of course, in focus after the 1:1 bonus issue, and more announcements awaited from that end. So what is the big theme? Auto climbing up the charts towards close. That's the big one, I would say. Your energy and oil and gas stocks moving very sharply, and some of your FMCG counters doing very well. I'll just quickly pull up the Nifty 500 gainers and losers to give you a sense of what's happening in the broader markets, because the broader markets have not fared as well as the Nifty today. Sonata soft because of order wins. PNB Housing has a good note out on it. L&T Tech also looking up today on the loser side. Wellspun has a block deal kind of an impact happening. And, those are some of the stories today. But all in all, an exciting day of trade. One is waiting to watch and see what Friday is looking like for this market. But that's all the time we have right now. From Hersh, me and the entire team that put the show together, thank you so much for watching. Stay tuned. A lot more coming up on the other side on NDTV Profit.